Hello everyone and welcome to HDFC Life presents live sessions partnered by ET Now, a series where we aim to not only bust some myths around life insurance but also help you choose the right policy for your needs. Life is a journey filled with diverse stages, whether one is stepping into adulthood, building careers, raising families, or savoring the fruits of our labor in retirement. Financial planning forms the cornerstone of our journey, ensuring we navigate each stage with ease and confidence. As we enter a new phase of life and start to think about building our own families, securing their future takes the utmost priority. However, the challenge for them is the lack of understanding of life insurance and its benefits. And hence, this year, HDFC Life is focusing on bridge the gap to foster widespread awareness about life insurance through innovative and sustained efforts. I am joined here today by two experts who will help us not only understand the technicalities and intricacies of life insurance, but also help us in understanding the best practices and strategies to pick the policies that allow us the comfort of knowing that our dependents are secure. Please allow me to welcome Mr. Vineet Arora, Senior Executive Vice President, Liabilities Product Group, HDFC Bank, and Mr. Lavneesh Gupta, Group Head, Bancassurance, HDFC Life. Thank you so much, Vineet and Lavneesh, for joining us today. All right, so let's begin. And Vineet, let me start by asking you. I want to start the discussion with you. While every phase of one's life marks a significant shift in responsibilities and priorities, and marriage is no different, from home or car loan payments to shared expenses and eventualities, the possibilities of children. It brings a host of financial obligations. Now, in this whirlwind of new beginnings, how can life insurance play an integral part?
Thank you. Thanks for having us here. I think life insurance is a very, very important thing. The saying goes, there are two risks in life. One is risk of living longer, and risk of living shorter. Both are risks. So it is saving instrument also, but most important, I think, is everybody must purchase insurance policy. At least if you don't want any investment, let's have a term plan at least, which is at least 10 to 15 times of your annual income, so that your dependents can have the same standard of living as they are enjoying as of now. That is the benchmark, actually, thumb rule we can say. So that is very much required for everybody in this country and everybody across the globe also. This is there. And you purchase term plan, like a young couple case, they can purchase term plan right now, the premium will be very, very less.
Okay. Lavneesh, as we just discussed, there are significant financial milestones for young couples. Could you take us through some of the life insurance plans that can be a game changer for young couples starting their financial journey together? And also, what should be the right coverage amount for young couples? They have entire life ahead. They'll be having more financial responsibilities on them. So, changing life stages, should they be, going for a new cover or a higher coverage? So, just explain the maths behind that also.
So, I think young and responsible couples, and I would reiterate this point, responsible. Not many people realize, and I think Vineet mentioned about a point of buying insurance at a young age is at a low cost. It's very important that we take that decision at that point of time, because not many people realize that it comes at a lower cost because of the mortality risk at a young age is much more lower and the cost is lower. Like I think Vineet alluded towards 10 to 15 times. When it is younger, it can be much more higher. Because your estimated income can be much more higher down the line.
Right.
Today, if you're drawing a salary of say 10 lakhs a year, in about 10 to 15 years, that could be itself about 40 to 50 lakhs.
Sure.
So what you're looking at is that 10 times at that point of time in 10 to 15 years would be roughly, if that is about 5 crores out of 50 lakh salary, would mean at 10 lakhs is a 50 times cover. So somebody at a young age is capable of buying that cover, but does a short change, because today's is a digital generation, so people tend to spend money which is more in electronics than looking at what is a plan for future. So for the young couples, I think it's the sanest advice to look at it. Secondly, I think if they are investing, and a lot of people in today's time in the home or the house investment, what they do, if they're taking a loan, I think beyond the life cover on themselves, they should cover their liabilities in the beginning. And I think bank as such, along with us partner, we provide the credit protect on that scheme. And it's proven in the COVID times that it's very important to provide that cover. I think responsibility comes when you're young and take those covers, which ideally looking at liability or taking the risk on the higher sum assured basis the increased income down the line. So I think it's very imperative to work on that. Apart from it, I think there are many other savings instruments to save,
right?
Which helps to build on the savings, which could be risk. If you want to take, then there are ULIPs,
Okay.
Which gives a concerted annual SIP mode to invest. As the product you keep on investing, it takes care of the cost averaging, which is there. Or if you're looking at guaranteed return, then you have savings product to look forward to, which can plan in terms of how do you take it at the point of retirement, because most of the private sector doesn't have retirement plans. So hence it's important to invest early and gain those benefits. So it works around in these platforms which you can do.
So what should be your action depending on the kind of life stage you are at?
So I would say starting with the term, if there are any liabilities in terms of the home cover, then it is very important. Then if it's like savings, I would tend to go first with the ULIP as a younger age, and then look at maybe the guaranteed platforms or the retirement planning. So that would be the stage of investments which you look forward.
Let's move on. Vineet, next question to you. How does this scenario change when you consider the different structures of different households? Are the life insurance needs different for a household where both partners are working versus when one's holding down the fort at home? How does life insurance planning differ in these scenarios?
Yeah, I would say life insurance is a universal thing, whether it's a single earning or double earning person, family. I think both require, because your liabilities, your expenses tend to be like so only. Where single person having expenses like the double earning, they are also having the other liabilities also. One thing Lavneesh touched about the saving plan, ULIP plan, term plan. I would also say, don't be static. Just after every 4 or 5 years, take the enhanced cover depending upon your increase in income.
On the term cover?
On the term cover.
Yes.
Okay, so we get an enhanced cover also on more premium?
Yeah,
yes.
Of course, additional premium.
Additional
So you take that cover also, you take the new policy also, you can take new policy also depending upon the need and depending on the period tenor. And more important, I would say, when you take any loan, like supposing you take the home loan is generally taken 15-20 year period. I would say for home loan also, let's take we have a credit protect products also. Actually, this is a very good thing. In fact, whenever I took loan also, I ensure that my loan is protected. At least my term plan is separate. But that term plan may not be suffice when the loan is there, because home loan is a very big amount. So if the loan protect cover is there, so credit protect is there, then it means the nominees or legal heirs are not supposed to pay that amount is anyway paid off. So whosoever earns, single earning member, double earning member, I think then both have to take the cover.
If both are earning, then they should be taking.
Yes, both have to take the cover.
And how should be the coverage amount then?
That depends on same 10 to 15 times of your annual income.
If the spouse is not working, you cannot take a term plan for them. You cannot take.
No, you can take term plan for that also.
Okay, if they're
term
not
plan
working
can be
even
taken.
then?
It's an insurable interest, we can take term plan also.
Okay.
Yes. Yeah. So I think you can take that, but there's some limitation in the amount.
Yeah, amount of
coverage.
Sure. Let's move on, Lavneesh.
Yep.
When we move in lower tier markets, not only the household structure and lifestyle, but the overall financial portfolio too changes. Have you noticed any significant shifts or adaptations when it comes to life insurance to cater to the evolving landscape and needs of these regions? And now, do you think we can bridge the gap in the understanding, awareness in the lower tier markets of the country?
So I think in last 10 years or so, I think last decade, I think there's a lot of growth. The real money started to flow in there. Whether it is, if you look at the data from the FMCG, the two-wheeler sales, the auto loan sales, or in terms of build up in the markets in those, the money has really got equally divided into these places. The real growth, if you look at HDFC Bank, has really taken a focus in terms of the semi-urban rural markets. They have really expanded big time. More than 50% of the branch network is present in the semi-urban rural market, which is tier 2, tier 3 markets. IRDA data shows that the maximum growth in the number of policies is in these markets, which is showing a clear indication that, yes, of course, the first product to buy is the protection, which is a clear sign that there is a knowledge level which is increasing for them to cover themselves. The schemes which have come from the government side, which is Pradhan Mantri Jan Dhan Yojana, which is linked to the bank accounts, has really seen an increased penetration in terms of what is in the last 5 to 10 years in terms of the business which has increased, which has also evolved them to learn about it. Secondly, I think the phase of COVID has put the fear in everybody's mind, that you need to buy life insurance. So it's become a bit of natural pull. Having said that, I think they are also tending towards return of premium. Those are much more easier in their mind to sell. And in case also the feeling that if you survive, you'll get some money back, right? For selfish reasons, right? So that's the other thing which is evolving. They have the habit of annually investing. They are away from the metro urban markets where they are very clean, they want the money back immediately. They're in a habit of saving money for long term. So I think those habits are changing in those markets, which is helping us to grow further. And the growth is much more larger. And as a group between HDFC Life and Bank, I think the maximum growth happened in the semi-urban rural markets in a big way in last financial year than the previous years.
The requirements are no different, it's the same.
The requirements are same, just that the average ticket size is lower. But having said that, the
and
product...
why is that?
Because the metro urban has a much more higher capacity, the wealth
exactly.
and the ticket size are much larger. But having said that, the tendency of the product mix is tending towards what metro urban is, which used to be a wide difference. Go back 20 years, it used to be mostly term or mostly some other limited small products. But now I think they have started appreciating, they become more knowledge, the access to information is more. So it is working out better in that format. So I think it's evolving, and I won't be surprised that they overtake the markets for future. So, the trends and data.
That'll be interesting to watch.
Yeah, that's the interesting thing to watch out for.
All right, and now we move to the audience questions. We spoke to the people from across the country and they have shared some questions with us regarding life insurance. Let's have a look at the questions that have come in.
I am Lyrics Mishra from Mumbai. Both I and my wife are working. So when it comes to term plan, we have always had disagreements on what term plan, because there is a lot of information overloaded on the term plan we choose. Can you suggest some important factors while taking a term plan?
Vineet, would you like to answer this question?
So term plan should be purchased by immediately, I would say. And again, at least 10 to 15 times of your annual income. And this thumb rule.
Hi, I am Ranjit from Jodhpur, Rajasthan. Recently, me and my wife took a home loan. Along with that, हमारी और भी liabilities है. Can life insurance help us in any way?
Lavneesh, what will be your view and recommendation?
Definitely. I mean, I think we touched upon this topic some time back. I think any person who's taking any loan, whether it is home loan or whether it is a large loan which is there, I don't think that stress should be put onto the family around them. And technically, this coverage should be outside the normal term cover which you take. So it should be, if you're taking a term cover or any other savings cover which is 10 to 15x of your current salary. And when you're in the earlier stage of young and being responsible, that amount should be more than 10 times, or as I suggested, 40 to 50 times when if it is below 30 years of age. Right. I think it's very, very important and imperative for every person to take a home loan cover as a credit protect. And I think every bank offers in this country. Unfortunately, we don't have time, and that time we think it's very
also
costly.
Awareness.
And also it's our role also per se between bank and life insurance people as partners. When we tend to go to any person who's buying a house and home loan, I think we have to essentially give some examples what people have gone through in last 4-5 years.
So how can one buy it? I mean, if you could just explain it by an
example.
So
at the point of, when the loan is disbursed, the documentation is completed and the loan is anyways disbursed, there is a separate loan account which is done to, help in terms of buying. And it gets adjusted as part of the EMI which is taken care of. Now, essentially it covers, either there can be 2-3 types of covers. One is if you've taken a loan of 1 crore, you can get a loan of full 1 crore. Which will be level term till the payment is done. Second is it is reducing balance basis how your loan amount is reducing. So that gets reduced accordingly. So the cost is much more lower. And in case of either or, so if it's a level which is 1 crore, the first amount is paid to the lender and the remaining amount is paid to the nominee. And if it is reducing cover, the whole amount is paid to knock off the loan. So, technically, out of 100 such cases, and you know, even in the bank experience in 2.5, 3 years of COVID time, the claims, the maximum beneficiaries have been in the field of home loan. And the satisfaction for, I think, the bank and the life insurance companies has been during that time, that we could save a lot of families and the people who could live in their homes, and they were not shunted out, they were not forced to sell. So I think that's what would be.
Okay.
And whenever you take any loan, maybe home loan, loan to property, maybe car loan even, or any other loan, please have the loan product also. That's very much important to take care of family. If you love families, I think it's very important for all of us.
Hi, I'm Sana Subhash from Vadagara, Kerala. Is there any life insurance for housewives? Can I get life cover?
So life cover is possible, but that is only restricted up to some percentage of the main household owner. So the spouse cover, percentage of that spouse cover. Like Vineet mentioned, I think at the time of demonetization, the maximum money which came were the women of the house, which are housewives, who were saving money in small cash amounts at home, right? So I think those are the target segment for long term. They put in some small bit of money, brings in larger corpus down the line, and that's where I think life insurance caters to. And third is, I think, the life expectancy of women in India, you know, it's 5 years higher than the male counterparts, right? So they have to take care of themselves for another 5 years. So how do they do that? So that is where I think it helps us to build that much corpus, and that has to be done as a saving, which is there for them to look forward to.
And I think also gives the financial freedom to the housewife.
Yeah,
that's a more important point, which is in our Indian different society, I would say, is very much required. They have a financial freedom to take care of the financial goals.
Sure. So life insurance is important, and more important is that you recognize the kind of coverage and the kind of product you want to be covered under life insurance. Thank you so much for being a part of this. Thank you.
Thank you.
That was indeed very informative, and I hope it helped solve your concerns as much as it did to us. As you start a new phase of your life, you need to start thinking of securing the future of your loved ones. So take the necessary steps today, speak to your advisors and financial professionals, and join us as we help India bridge the gap to financial freedom. I will see you next week. Thank you so much.